Hello and welcome everybody. This is our COVID-19 webinar. My name's John. I'm the Managing Director here at the Field Group. Before we start, just want to thank everyone for attending. Let everyone know that we're all now working from home. No, I haven't started my video. We're all now working from home, which has been, I guess, a little bit of a challenge. We've done that for a week, but everyone's getting used to this new, I guess, reality. What we'll cover today is the job seeker payment, the cash boost subsidy, all other sort of government incentives and everything relating to business. I'll cover everything else COVID-19, so that's the common questions that we've been asked, and I'll finish up with Q&A. So that's any questions that have been emailed into me already, or if you want to ask a question, there's a Q&A box up in your Zoom meeting there. Everyone can see those questions. Encourage you to ask those questions and I'll get back to them. This webinar will be available on our website after I'm done. So I think it's an hour wait post this webinar. It should become available as an email. If you can't find it on email, it will be uploaded to our website. So I'll make a start. Before I start, we've got this. This is our webpage, and across the top is the knowledge base. So that knowledge base is where you will find everything we're releasing in relation to COVID-19 and any other, I guess, business-related questions that we get from clients. It all goes into that knowledge base. So I'll start with this Jobkeeper payment. So this is what we've been asked, I would say, the most about in the last 2 days. It's not legislated, but I'll go through what we do know. So what is Jobkeeper? Jobkeeper is a payment. The Jobkeeper payment is a subsidy that will be paid through the tax system to eligible employers impacted by COVID-19. The eligible employers will be able to claim a subsidy of $1,500 per fortnight per eligible employee from the 30th of March 2020 for a maximum period of 6 months. This subsidy will be paid by the ATO monthly in arrears and will ensure that eligible employees receive a gross payment of at least $1,500 per fortnight. Payments will commence May 2020, which means you're going to need to cash flow these payments until May if you want to keep your employees engaged with your business. Now, self-employed individuals, so that's businesses without employees, can also qualify to receive this Jobkeeper payment. Now, when is an employer or business eligible for this Jobkeeper payment? Now, to be eligible, you must be a business with turnover of at least 1 billion and have your turnover reduced by more than 30% in a relative comparable period of a year ago. So what we're hearing there is that your March 2020 results will be compared against your March 2019 results to see if you're eligible. Now, there is some holes in that, so we need to see the legislation to see whether your business is eligible and what meets that 30% turnover test. Now, if you're a business with turnover of 1 billion or more, you're probably not listening to this webinar, but you'll need to have your turnover reduced by 50%. And finally, the business is not subject to a major bank levy. So that is, you are not a bank. Self-employed individuals and not-for-profits that satisfy the above requirements will also be eligible for this payment. So next question is, which employees are eligible? So the employee must satisfy all of the following requirements to be eligible. And that is, the employee is currently employed by the employer, which includes an employee who's already been stood down and you choose to rehire them after hearing these job seeker measures. The employee must have been employed by the employer as at 1st of March 2020. The employee is either full-time, part-time, or a long-term casual employee. So a long-term casual employee is anyone who's been active in the business for longer than 12 months. The employee must be 16 years of age, and the employee must be an Australian citizen or holder of a permanent visa. Now, there are some other categories of visas there. I'm not strong on visas, so if you do have an employee in that category, please email in and we can look up to see whether that employee is eligible. The employee is not in receipt of a JobKeeper payment from another employer. So the employee is only going to receive that job seeker payment once. How to apply? So initially businesses can start to register their interest on the ATO website. Now that is only a register, that's only in expressions of interest at the moment. So you cannot apply for these JobKeeper payments at the moment. We're still waiting for the ATO to set up their systems as to how they're going to process this payment. But what you can do is add yourself to a list to show when their system is updated, you'll be notified to go and put in that application. Now in that application, you're going to need to show supporting information demonstrating that your business has had a downturn of more than 30%, and you must report the number of eligible employees employed by the business on a monthly basis. Now, businesses without employees, so that's your self-employed individuals, they'll need to provide an ABN for the business, nominate an individual to receive the JobKeeper payment, and provide that individual's tax file number, as well as a declaration that the business is in downturn. Now, we're expecting that businesses are going to need to update this information monthly with the ATO to confirm that their ongoing eligibility for the JobKeeper payment. Now, how is the JobKeeper payment applied by an eligible business? The underlying purpose of the JobKeeper payment is to ensure that eligible workers are paid an amount of $1,500 per fortnight. Now, the employee will receive this payment as follows. If the employee ordinarily receives at least $1,500 in gross salary per fortnight, they'll continue to receive their regular income according to their normal workplace agreement. So that's their normal pay. And that $1,500 payment will effectively be a subsidy back to the employer. So I'll go through that again. That's where you've got the scenario where your employee is, let's say, on $3,000 per fortnight. You as an employer are going to receive $1,500 to cover that employee's wages for that period, if your business has had a downturn of more than 30%. Now, if the employee ordinarily receives less than $1,500 in gross salary per fortnight, the employer must pay the employee their normal salary plus a top up to bring them up to $1,500. So if you're paying your employee less than $1,500 per fortnight, you're not going to benefit out of this announcement. You're going to need to pass that payment on to your employee so that they're receiving $1,500 per fortnight. Now, if the employee has been stood down, you'll need to pass on to that employee $1,500 per fortnight under this JobKeeper payment scheme. And if the employee's already was employed at 1st of March, you've stood them down, and now you want to re-engage them because this JobKeeper payment scheme is in, they're eligible for $1,500 per fortnight, and it's possible that they can cancel their job seeker application. So common questions we're getting asked, and I want to, I guess, caveat that by saying this isn't legislated. So we don't know a lot of the answers to these questions. The first one is, how will turnover be measured? We're expecting, well, what's been released is it's going to be compared against your monthly takings of a relevant period of the previous year. So March 20 will be compared to March 19. April 20 will be compared to April 19. Waiting for legislation on what that looks like. What we can say is you need to have accurate records of your revenue data for the 18-19 year and for the current 19-20 year to be able to do this comparison. So ensure you've got accurate records of your revenue. We recommend that you compare your revenue for your whole of March to 19 to 2020 to see if you think you are eligible now, and you need to measure that decline to ensure that it's been by more than 30%. Now, if you're not eligible in March, you may become eligible in another month. So that means looking at your April numbers and seeing if you project that you're going to reduce revenue in April, you need to go back to 19 to see, hey, what was our turnover in April? Can I claim the JobKeeper if operating as a trust? We don't have the answer to that one either. Our hope is that you can. What we don't know is whether that's going to be in relation to one trust beneficiary or multiple. Now, can I claim multiple JobKeeper payments? You can't. You're going to be locked into one JobKeeper payment per job site that you're with. And will this impact my job seeker claim? It will. You cannot receive job seeker and JobKeeper. So I'm going to open up to questions now in relation to the JobKeeper. So one question that's come through is whether it's cash or accrual accounting for the comparable reporting, and we don't have the answer to that yet. Our expectation is that it'll be what your normal accounting method is for recording your income. Is there any other questions in relation to JobKeeper? No, I'll move on. So the next stimulus measure we're going to run through is the cash boost. Now, I'll give you a history of the cash boost. So it was first released on the 12th of March, and it started as a tax-free payment available to small businesses that employed workers. And it was going to be 50% of the tax withheld from salary and wages up to a maximum of $25,000 with a minimum of $2,000 in the March 2020 quarter. We then had an announcement on the 22nd of March where this had been increased, and it meant that eligible entities will receive at least 20,000. So that's an increase from 2 up to a total of 100,000, which was previously 25. This is going to be released in 2 boosts. The first boost will be 100% of your tax withheld from salary and wages up to a maximum of 50,000. Now it's a minimum of 10, and your second boost will be an additional payment equal to the total of your first boost. And it now includes payments to not-for-profits and charities. So to be eligible, you must have had an ABN at the 12th of March 2020. You must have turnover of less than 50 mil. So for your billionaires, you can turn off now. You need to make a payment of wages that is subject to pay-as-you-go withholding, even if nothing was actually withheld in the March 2020 or June 2020 quarter. And you need to lodge your March 2020 and June 2020 activity statements. What's also been released is you must be an active business, which means you've either lodged your 2019 tax return already, or you've lodged an activity statement for the relevant period by 12th of March 2020. Now, the relevant periods are July 2018 and December 2019 if you're a quarterly with lodger, or July 18 to February 2020 if you're a monthly lodger. So previously this was announced as you needing to be registered for pay-as-you-go withholding at 12th of March. That's been changed. What you need to be now is an active business. Now, an active business is one, the ATO have determined is one that lodges its activity statements on time. So if you haven't lodged an activity statement since July 2018, you're not going to be eligible for this cash boost payment. Now, the first boost is 100% of your pay-as-you-go withholding for the March 2020 and June 2020 quarter, with the minimum credit being 10,000 and the maximum being 50,000. Now, for quarterly lodgers, you're going to get your first payment of the first boost on the 28th of April 2020, and you'll get another payment of the first boost in quarter 4, which will be on the 28th of July 2020. Now, if you maximise the boost payment, that is, you get $50,000 in the March 2020 quarter, you're not going to get a payment on the 28th of July in relation to the first boost. Now, if you're a monthly lodger, you are going to receive your payment in your first boost in 4 payments in the April, May, June and July months. Now, your first boost payment is going to be 3 times your March activity statements pay-as-you-go withholding. Once again, if you maximise that claim at 50,000, that's the only payment you're going to get on the first boost. If you haven't maximised it, you will also receive a payment April, May and June until you reach that $50,000 maximum. Now, the second boost is a little bit easier to calculate because it'll just be simply 100% of your first boost. Now, it will be delivered the same way as a credit on your activity statement account upon lodging your BAS for the March, June and September quarters. Now, if you're a quarterly lodger, you're going to receive your second boost payment on the 28th of July and your second boost payment on the 28th of October. If you're a monthly lodger, similar to the first boost, it's going to flow in the June, July, August and September months. The ATO have released an integrity measure, and what it says is any sudden changes to the characteristics or characterisation of payments may cause us to investigate whether payments are in fact wages. If the payments are wages, we may consider the characterisation of past payments, including whether they should have been subject to pay-as-you-go withholding and whether superannuation guarantees payments should have been made. You may also have FBT obligations that have not been met. So what the ATO is saying there is they don't want artificial or contrived arrangements to maximise this cash boost, and what they've illustrated is restructuring your business, changing the way you pay your workers to fall within eligibility requirements or to maximise the boost, or increasing wages or pay-as-you-go withholding in a particular month to increase your boost. They're going to come down pretty hard on these integrity measures. So common questions are, can I pay myself a wage instead of a trust distribution or dividend to maximise the boost payment? You're able to do that, but if you're doing that with the sole dominant purpose of maximising your boost payment, then you can expect an audit from the tax office. Can I increase my wages? It's the same answer. So yeah, you can increase your wages, but if you've done that with the sole dominant purpose of maximising your boost payment, the ATO may audit you or knock back your boost claim, increase pay-as-you-go for your workers, sole and dominant test again, and can I get this payment for contractors? You can only get it for contractors if you withhold pay-as-you-go withholding from those contractors. Now, if a business includes wages for the first time in the March 2020 BAS, to claim the cash flow boost, the ATO will look to see, has a wage been paid? So if you've included that in your BAS statement, they'll be looking to see whether you actually made payment of that wage throughout the quarter. Now, if you have included that wage, have you paid super on that wage? They'll be looking to see whether your work cover policy includes that level of remuneration. They'll be looking at your single touch payroll records to ensure that you have been including those payments in those lodgements, and they'll be looking back at the history of your business to see how you've remunerated yourself previously, and will you continue to remunerate yourself in that way to maximise these boost payments. Now, has anyone got questions in relation to those boost payments? So one question is the $1,500 tax-free? I can answer that it is. Do you have to have lodged all of your activity statements for the relevant periods or just in one period? If you haven't lodged your 2019 tax return, you just need to have lodged an activity statement one activity statement post 1 July 2018. Another question, can an employee have a second casual job for a few hours and still get the job seeker payment? I'll go through job seeker later in the webinar. In terms of Jobkeeper, casual workers will be eligible for Jobkeeper as long as they were employed by that employer at 1 March 2020, and as long as that employer has engaged them for longer than 12 months. Now, have you got any other questions in relation to the boost payment? Yep, flying in. So what if I'm a director and haven't paid myself a wage? Another question. What if I director and haven't paid myself a wage or any other income for the last year? So on face value, Matthew, you're not eligible for the cash boost payment. Now, if you've historically paid yourself wages, let's say at the end of that financial year in June, our belief is that you are eligible for the booster payment, but not till the June quarter. The boost payment, if 100% each time, makes it sound like you get $10,000 or $50,000. I thought it was twice. So the maximum payment you will receive under the cash boost payment is $100,000. And that will be based on you having $50,000 of pay-as-you-go withholding for the period January to June. And then you'll get the second boost payment equal to your first boost payment. Now, if you haven't drawn any income or pay-as-you-go withholding previously, and you're looking to change your arrangements now to get this cash boost payment, you're not going to receive it. Can we receive both the Jobkeeper and company boost payments? That's a yes, you can. And can I decide to pay myself a wage instead of maximising my super contributions? You can. So if you've paid yourself superannuation out of your company previously and chose to put that remuneration into super, you can make a decision to pay that remuneration to yourself. I don't see that as you changing the way you remunerate yourself. So I'll keep going with other government incentives. So in Victoria, payroll tax, if you're paying payroll tax and your wages are $3 million or less, you would have already started to receive a refund of that payroll tax. Points to note, you need to continue to lodge future payroll tax returns, even when payment isn't required. Employers that are members of a group for payroll tax purposes, the eligibility threshold will apply to each employer individually. Any business entitled to this refund will also be able to defer payment of payroll tax liabilities for the first 3 months of 2021. And you need to apply for this reimbursement through PTX Express. So there's a apply for a refund on the menu bar. When you log in, you need to click on that to be able to receive your payroll tax refund. Now, these payroll tax relief measures are different by state. So I've got a summary in there. If you're not from Victoria and you want to see what sort of payroll or tax relief is eligible in your state, this is the slide you want to look at. I'll flick over from this. You're going to get a copy of the slides after, and happy to take any questions in relation to another state's payroll tax offline. Another measure released has been this business support fund. Now, this is once again Victoria businesses only. Now, they can apply for a one-off grant of $10,000. Businesses can apply if they employ staff and have been subject to closure or are highly impacted by the non-essential activity directions issued by the Deputy Chief Health Officer to date. So I've included a link in the slides as to what businesses are included there, but we're thinking hospitality, gyms, real estate agents who've had to shut auctions, anyone who's been directly impacted by those non-essential activity directions, you're eligible for this $10,000 payment. You need to have turnover of more than 75,000 and have a payroll of less than 650,000. You need to have an ABN or have held an ABN at 16th of March 2020. And you have to have been engaged in carrying out the operation of the business in Victoria on the 16th of March 2020. I think this is a good one for any business that has been impacted. This is a grant of $10,000 to help you through. Now, one of the other measures is this early release of superannuation. So this is for individuals who have been unemployed and are eligible to receive a job seeker payment, and they've had eligible, or there's a farm household allowance, which they were possibly eligible for. Now, to be eligible, you need to, after 1 January 2020, be made redundant, have working hours reduced by more than 20%, or for the person's a sole trader, their business was suspended or the reduction in their turnover was 20% or more. So if you fit that category, you can apply through MyGov to have a payment of $10,000 released. That payment is expected to be released on the 28th of April 2020. And if you still meet that criteria post-June, you can apply again to withdraw another $10,000 out of your super fund. Now, we can't recommend that you take $10,000 out or you don't take $10,000 out. So that's something you're going to need to get advice on away from us. But what we can say is, some of the modelling we've seen shows that if you take $10,000 out of your superannuation now, it may cost you a lot more in the future. Wage subsidies for apprentices and trainees. So employers with less than 20 full-time employees who retain an apprentice or trainee will be entitled to a government-funded wage subsidy. Points to note on this, it's 50% of the apprentice's wage or trainee's wage from January to September 2020. It's a maximum of $21,000 per employee. Now, the apprentice or trainee must have been employed or in training with you as at 1st of March 2020. And these payments will be facilitated through the Australian Apprenticeship Support Network. So think your MEGTs and your Serena Russos. So another measure that's been released is the asset write-offs. So previously, if you held an asset of less than $30,000, you were eligible for an automatic write-off in your tax return for that year. That measure has now been increased to $150,000 for assets bought before or by 30 June 2020 or by 1st of July 2020. Now, if you purchase an asset over $150,000, you'll get a 50% deduction in the year the asset was purchased. Now, this measure has been extended to July 2021, so it's one more year on the instant write-off, and you'll get 50% of the 150, or however much the asset was worth. Plus, you will also get your normal depreciation claim for that asset in the first year. So you get 50% plus what you would have automatically claimed on that asset had this incentive not been in place. And this is one we fielded a lot of questions on. It's the government-backed loans. So the government is providing a guarantee of 50% of new unsecured loans made to eligible SMEs for the purposes of working capital for their businesses with a turnover of less than 50 mil. Now, the purpose of this is to make it more likely that banks and lenders will approve these sort of unsecured loans. And the loans will have the following terms. They'll be up to $250,000. They'll have a 36-month term with no payments for the first 6 months, and they'll be unsecured, which means no collateral, no property required. These loans will be made available by banks this month. I've spoken to a number of banks, and they've been very strong that they're going to abide by their responsible lending guidelines, and that these applications need to make commercial sense. So you're going to need to provide cash flows. You're going to need to have had a strong business prior to COVID to be eligible for these loans. Now, banks are also offering relief on repayments. So banks, effective 23rd of March, rolled out this small business relief package. Now, it includes a deferral of principal and interest repayments for all term loans and retail loans of small business customers for 6 months. Now, the interest is still being charged, but it'll be capitalised. And then it'll be a negotiation piece whether the term of your loan is extended by 6 months or whether you're going to increase your repayments to make up for the 6 months of payments missed. It's open to all current small business customers in regards to which banks they bank with. We've seen a lot of clients look to refer equipment finance repayments, home loan repayments, if their business is impacted by COVID-19. If your business hasn't been impacted, we're still seeing banks provide these sort of relief on repayments, and whether you should be taking advantage of that, it's going to depend on your own cash flow situation. Now, we're not sure what the ability to borrow is going to be on the other side. If you've chosen to put your repayments on hold, we're not sure what sort of hit that's going to put on your credit file. We hope none, but the answer is unclear on that yet. So land tax deferrals. So this one's not a saving, it's just a deferral. If you're eligible, you need to have land holdings of below 1 million, and the land tax deferral will apply to commercial properties, industrial properties, and vacant land. So not a wide application there, but certainly if you're a landlord and for whatever reason you're now no longer getting rent on your commercial property, it may be prudent to look to defer those payments. Now, the other ATO support measures, I covered this in the last webinar. They're allowing businesses to defer by up to 4 months the payment date of amounts due on business activity statements, income tax assessments, fringe benefit tax assessments, and excise. They're also deferring payments on existing payment plans. So if you've got a payment plan in place with the ATO, contact us. We can contact them to get those payments on hold if your business is impacted. They're allowing businesses on a quarterly reporting cycle to opt to go to monthly GST reporting in order to get access to refunds of GST. If your business normally does receive GST refunds or has bought a significant amount of equipment, that may be something you take up. Businesses are now allowed to vary pay-as-you-go instalment amounts to 0 in the March quarter, and you're able to claim back credits of any instalments you've paid in September and December. Now, you can do that even if your business will have a profit in that income year and will have a tax liability at the end. They're not going to impose any penalties in relation to varying those instalment amounts. They're also looking at remitting any interest and penalties incurred after 23rd of January 2020 that have been applied to tax liabilities. So there's been no announcement as to liabilities that are pre 23rd of Jan 2020. Now, they said they're working with affected businesses to help them pay their existing and ongoing tax liabilities by allowing them to enter into low interest payment plans. We haven't seen instances of businesses going into payment plans at this stage. It's all been about deferrals, and we'll work out how to pay these liabilities once this COVID situation is over. I'm going to skip over questions. I'll leave them to the end, and I'll go through everything else COVID-19. So Job Seeker. So this is different from Jobkeeper. Now, Job Seeker is facilitated through Centrelink, and it's a payment of $565.70 per fortnight if you're a single, which now includes an additional $550 coronavirus supplement. Now, that $565.70 is you're going to have circumstances where that number varies if you're a couple, if you've got dependents, if you're receiving other income from another job, that you may not receive the full $565.70, but you will receive the full $550 coronavirus supplement. To be eligible, you must a permanent employee who has stood down or sacked. If you're a sole trader or self-employed worker who now earns less than $1,075 a fortnight, or if you're caring with someone who's got COVID-19, you're eligible for these payments. Now, the job seeker payment is tapered, meaning if you earn 0 for the fortnight, you'll get the full job seeker payment. But if you still have some income, you'll only receive a portion of that job seeker payment. As I said before, if you're eligible for the job seeker payment, you'll receive the full $550 fortnightly coronavirus supplement. So that may be because of your income, you only receive $100 of job seeker because you've got a casual job or something that's impacting the earning, or you're a sole trader who's got a minimal amount of earnings. You're going to get $100 plus whatever your income is, plus this $550 fortnightly coronavirus supplement. Now, Australians who lose or have lost their jobs, they've extended that to the spouse can earn up to $79,762 before you become ineligible for job seeker. And this threshold was previously $48,000. Now, along with the job seeker payment is this support for households. So in addition to the job seeker payment, 2 $750 tax-free payments to Social Security, veteran and other income support recipients and eligible concession card holders will be made available. That first payment will have commenced from yesterday, and there's going to be a second payment on the 13th of July 2020. Now that payment is basically for anyone on Centrelink payments. It includes pensioners, it includes job seekers, and it's going to be 2 $750 payments. Rent relief, we received a lot of questions in relation to what do I do with my rent, and a lot of questions from landlords saying, what do we do with our tenant? Now we've prepared a letter for tenants to send to their landlord if their business has been impacted by COVID-19. You can email me after this webinar or email anyone at the field group and they can give you access to that template. Our message on this is contact your landlord. Now there's been a 6-month moratorium on residential and commercial evictions that's been announced, but no government assistance has been released to help in these situations. The big message from government has been it's for all parties to work cooperatively to negotiate a commercial outcome between tenant and landlord. Now, if you're a tenant, I think it's really important that you understand your lease, understand your rights and obligations of that lease, and to not forget that the landlord may be suffering too through COVID, and may have, they may still be having their own, interest costs and holding costs of that property if you can't pay them rent. If you're a landlord, I think you've got to be realistic with your tenant. If they're in hospitality or they're in the fitness industry or a beautician, it's unlikely that they're going to be able to pay those rental payments when their business has been shut down. It's also unlikely that their businesses are going to have the profits in 6 months' time to be able to back pay rent. So commercial outcomes are going to need to be negotiated so that both parties are looked after. Now, the ATO has confirmed for those who hold their commercial properties in their SMSF that you can provide tenants with temporary relief for rent reduction, including tenants that are a related party or related trusts. Now, before you rush to go and reduce your rent, please contact our office. We'll get all the paperwork in line to make sure that, one, your business is impacted by COVID-19 and it is market to reduce your rental payments. I'll click on to the next slide. So creditor action relief. So these changes have been made and will be in place till 25th of September 2020. And what they include is a increase in the amount that is required to issue a statutory demand from $2,000 to $20,000, and the time to respond to these demands has been changed from 21 days to 6 months. Bankruptcy proceedings, very similar to statutory demand. The amounts increased from $5,000 to $20,000, and the notice periods changed from 21 days to 6 months. Debtors petitions, they've also moved from 21 days to 6 months, and there's been temporary relief from directors for any personal liability for trading whilst insolvent through this COVID-19 period. Really important to keep these in mind when speaking to your customers and your creditors. No one's going to be suing each other through this period because it's simply not commercial, but you're going to need to come to commercial outcomes if you're going to want to continue supply and keep your businesses in operation. So similar to the rent discussions, really important that you're in contact with your customers and your creditors to see where they're at with payments and to advise creditors when you're going to pay them. What should you do with your employees? So the Jobkeeper payment has provided, I guess, some relief from this conversation, but I'll start. So if you've got a casual workforce and you've got a mixture of casual and permanent workers, it's a reality that it's your casual workforce that you're likely to cut first. Before you go and cut them, I'd be now looking at Jobkeeper for those casual employees you've engaged for longer than 12 months to see if they're eligible for that $1,500 per fortnight payment. There's no point running off to Centrelink to get the job seeker payment if they're eligible for Jobkeeper through you, and that you can keep that employee engaged while your business is in a shutdown period. For your permanent and full-time workers, there's three options. Option one, and I think this is the best one, is to negotiate with those staff for reduced hours. Employers should work collaboratively with employees to understand whether alterations to conditions are workable for both parties. Jobkeeper, I think, gives more of an opportunity for these discussions to take place. So your full-time worker, may now move down to a 3-day week, but is supplemented by a Jobkeeper payment. That's going to be something that you're going to have to consider as a business with your staff to see, one, are you impacted by Jobkeeper? That is your business reduced by more than 30%? If the answer is yes, you're eligible for those payments. So what do you do with your workforce? If we can reduce hours in that workforce, and you can be subsidised as a business owner to keep those workers engaged in your business, I think that's the best option. The second option is to see if stand-down provisions apply. So under Fair Work, stand-down provisions, an employer can stand down its workforce without paying limited circumstances. And these jobs aren't terminated, their wages are simply placed on hold. It's an advantage over redundancy in that redundancy payments are not made, and the stand-down can be selective, so you can pick and choose which employees are in stand-down. As an employer, you must be able to demonstrate that there is a stoppage of work, that employees to be stood down cannot be usefully employed elsewhere in your business, and that the cause of the stoppage was one which the employer couldn't reasonably be held responsible for. So examples of where the stand down may be utilised is enforceable government direction to close or no ability to work elsewhere. So we're looking at gyms, hospitality, restaurants, that sort of industry. The stoppage of work was due to a lack of supply beyond the employer's control. So we look at the Qantas scenario. And a large amount of the workforce is in quarantine or ill. As such, the business cannot continue, or an inability to get key components due to circumstances beyond your control. So that's an issue in supply chain. I'll go back. So stand down, really important before you make the decision to put your business in stand down, that you get advice. We can put you in touch with HR experts in relation to this to ensure that you can meet those stand down provisions. Now, under stand down, you'll meet the condition of a 30% reduction in your business. It's likely you'll meet that condition because it's likely your business will have 0% revenue. In that case, your employees, if you keep them engaged, will receive the full Jobkeeper payment, which will be $1,500 per fortnight. That may be a better option for some employees than redundancy. So the last option is redundancy. Now, it's important to remember here that positions are made redundant, not people. The redundancy occurs when the employer no longer requires the job to be performed by anyone. And this situation may arise because of a restructure, technological change, a downturn in work, or a business relocating or shut down. It's important to remember that notice periods, leave entitlements and redundancy pay need to be taken into account when choosing this action. So it's option 3, it's an option of last resort when you've negotiated with your staff or it's not feasible for them to take a reduction in hours, and you're unable to place your business in stand down because you don't meet that criteria. That's when you're looking at redundancies. Final slide. Superannuation guarantee. So I think it's important to note here that there's no COVID-19 concessions for superannuation guarantee. So despite there being severe financial pressure on employers to maintain cash flow, it's really important that you still continue to meet your superannuation obligations. and that is you're paying your superannuation within 28 days of the prior quarter. Now, it's in the current climate, we're expecting employees to closely scrutinise their entitlements, and the media is already highlighting, you know, the tough times and the $10,000 payment. If you're as an individual looking at your superannuation balance and looking to see whether you take out that $10,000 payment, you're going to be looking to see whether your employer or whether your employer has previously made superannuation contributions. So I think important that businesses continue to pay their superannuation obligations, not only because it's the right thing to do, but two, because it's likely if you don't do it, you're going to get an audit in the current environment. So I'm going to finish off with the 5 action items to consider for your business. Number 1 is to preserve your cash flow wherever possible. And that means talk to your customers, defer repayments with banks, talk with creditors, talk with your landlord, take advantage of ATO deferrals, and look at other means to maximise cash flow. So if you've got equipment, maybe you look to sell that if it's no longer required in your business. You want to be looking at every step possible to preserve your cash. Second action item is to stay informed on the stimulus package. You're obviously all doing a great job of that, listening to me rant on for 45 minutes about Cash Boost, Job Seeker, Jobkeeper, and all the other grants. So well done to everyone there. 3 is have a continuity plan. How will you act if your business is shut down or slows down? Identify weaknesses in your supply chain. Who are your key members of staff? How will they be replaced? How can your business operate without them? We have a continuity plan on our website. If you want to download the template, I think it's a good start to go through and sort of checklist what items you need to consider for your business. 4 is to be open and honest with your staff. Your staff want to know that you're planning for your business to survive. And then, well, I hope your staff aren't stupid, but you want them on the other side of this. And I think the more open and honest you are with your staff, it'll be appreciated. It'll give them some comfort as to what is coming, and it gives them time to plan, be it whether they're going to receive a Jobkeeper or Job Seeker payment. And 5 is ask for advice. We're here to help, albeit we're helping remotely. So I'll finish off. I'll hang around for any questions. I'll go through that chat bot. If you've got any other questions, happy to take emails. My email's on the screen, or you can email our generic address, which is info@fieldgroup.com.au. Thanks, everyone. And this webinar will go online hopefully in the next hour. So I'll go through questions. So SMSFs with commercial rents and no loans, is there any government support for SMSFs giving rent reduction to tenants? At this stage, there has been no government support released from Treasury. Whether that happens, I have no idea. All that's been released at the moment is the 6-month moratorium on evictions, and a direction to work commercially with your tenant to achieve an outcome. I'm just going through other questions, guys. Is the boost payment paid back to the government with interest? It's not a loan, so the boost payment will not be, as a business, you're not going to have to pay it back to the government. As a country, we're going to have to pay it back to someone. So we're debating today whether that's going to be through increased taxes, increased GST. Watch this space. Do we need to make a claim for the boost payment ourselves? The boost payment will automatically be paid through the lodgement of your activity statement. So if you're a monthly lodger, that'll be through your monthly activity statements. If you're a quarterly lodger, that'll be through your March 2020 and June 2020 lodgements. Can you email a copy of the slides? Yes, these slides will be available on our website probably tomorrow morning. who should complete the state government grant, me or my accountant? If you're comfortable in completing that grant application, I see no reason why you can't apply for that yourself. If you're not comfortable, by all means, push back to us. We're here to help. Does an asset over 150 need to have been brought in this financial year or after March 12? The asset needs to have been purchased after March 12. When is the job seeker payment to be paid from? I've stood down my staff from 22nd of March. So the job seeker payment will be backdated to 30th, I think it's 30th of March 2020. You need to have made the payments to your workers through the next month. So you need to cash flow those $1,500 a fortnight payments, and then you will be paid, you'll be back paid for that JobKeeper payment sometime in May. Beth, you're mean to say Bass March I lodged today, seeing it was a refund. I didn't need to put pay as you go in. So pay as you go installments, you had the option to vary the installment in the March Bass, and you also had the option to claim back any credit in the September and December quarters. Will this all happen automatically? So the cash boost payment will happen automatically through the lodgement of activity statements. The JobKeeper is going to require you to, or us to, lodge a application through the ATO website once it's available, and that'll flow the $1,500 a fortnight payments. Should I contact my field group person to help me with this? The answer is yes. My email is there though. Happy to take questions or forward it to your accountant if I'm not your accountant. Gary, question on JobKeeper. If an employee receives, say, $2K a fortnight and qualifies for the JobKeeper payment of $1,500 a fortnight, do I need to pay them the difference of $500 per fortnight? So the answer is, if an employee receives $2K before it qualifies. So you will, it's up to you whether you want to continue to pay your employer, the employee, $2K per fortnight. So if you've had a discussion with them and their pay is going to stay unchanged at $2K per fortnight, the $1,500 JobKeeper payment is essentially a subsidy to your business for paying that wage if you are eligible. If you've got an employee that earns $1,100 a fortnight, then you as a business will get the full $1,500 payment for JobKeeper, but you're going to need to top up that employee with an additional $400. You can't put that money back in your pocket. So he's asking why would I do this for someone on $2K a fortnight as I'm worse off? So if the employee is on $2K per fortnight, you're going to receive $1,500. If the employee is on $1,100 per fortnight, you're still going to receive $1,500, but you need to pay that full amount to the employee. So the employer is not going to benefit out of the JobKeeper subsidy, other than it's going to be able to give them some cash flow to keep their employees engaged. Is this information available after the session? Yes, it will be available. With a JobKeeper, if full-time or part-time person has been working for less than 12 months, are they eligible? The answer to that is yes. So as long as they were employed at 1 March 2020. If the employee was a casual, they needed to have been employed for the previous 12 months to be eligible. Question from Helen. If your business has had a big increase in turnover in the last 12 months so that your turnover does not reduce 30% from last year, are you eligible for the JobKeeper subsidies? Great question. Waiting for it to be legislated so I can answer that one. What we've seen to date is that it will be a month-to-month comparison. What we don't know is, if the business has downsized, So they've sold half their business. They will have had a 30% reduction based on last year. So are they eligible? If a business has purchased another business, therefore their turnover's increased, but when you're comparing apples with apples, their turnover's decreased. We're not sure how that'll, we're waiting for legislation to see how those scenarios play out. Would these government scheme apply if I was seeking to purchase a business during the COVID-19 timeframe? The answer there is no. So you would need to have been in business in March of 2020 to be eligible for the majority of these grants / incentives. Okay, if I have a part-time employee that I've stood down, am I required to reinstate their employment to allow them to receive the Jobkeeper payment? So you're not required to reinstate them, but you may choose to reinstate them because that employee will most likely get a greater benefit out of the Jobkeeper payment than the job seeker payment. And the reason you would do that is you want to still have that employee engaged when you come out of COVID-19 to operate in your business. So Kerry, is superannuation payable of the $1,500 Jobkeeper amount? So there's no superannuation or SGC requirement on the $1,500 Jobkeeper amount. So if you've stood down your employees and therefore and have made yourself eligible for Jobkeeper, that $1,500 Jobkeeper amount is going to go, 100% of it's going to go to the employee. In that circumstance, there's no requirement to pay the superannuation guarantee. Where the employee is receiving, let's say they're earning $1,000 a fortnight with you as the employer, and you're having to top them up the $500, you need to pay the SGC on the $1,000 payment that you're paying them, not on the top up amount. Are your employees expected to come into work whilst receiving the Jobkeeper allowance if there are minor things to do? So the answer there is yes. So if you're receiving the Jobkeeper payment and you've negotiated with the employee that you're going to keep them on, they're still under your management, so you can direct them to work for that payment. You don't have to have them on and not have them working to receive that payment. When we lodge the BAS, should we not pay it until the creditors hit the integrated client account? This is, of course, a business that can afford to pay the BAS. So the credits, doesn't matter when you lodge the BAS, the credits aren't going to come onto the integrated client accounts until the 28th of April. So I would hold off making any payments to the ATO until that credit hits the account. Jobkeeper payments for the first year in business with no comparable data, what period would I compare to? So waiting for legislation in relation to what the comparative data is going to be on that. If the business is unable to fund the $1,500 by the amount of employees, what happens in regards to Jobkeeper? So if you as a business can't fund the Jobkeeper payments, then I think you're forced to either leave your employees in stand down and push them to job seeker, or you've got to go and try to get some sort of finance to keep them engaged. Now it's only a timing difference on the $1,500. So if you can fund that for a period of, let's say, 5 weeks, you are going to get that amount refunded back in May. But understand it's going to be difficult if your business is shut down and you've got a lot of employees to fund those payments of $1,500 a fortnight while the ATO get their system in order. Cannot find anything given to a partnership which does not have wages. Is this correct? So go back to our integrity measures there. Are we talking Jobkeeper or job seeker? So I assume you're saying Jobkeeper, and we're waiting on announcements as to how partnership and trusts are going to be made eligible for that Jobkeeper payment. What we're seeing is that self-employed individuals will need to apply to receive that JobKeeper payment. Now, how partnership and trust fall into that in that self-employed worker, we're yet to have the legislation. $1,500 wage. So if a casual employee is still employed but not working in our retail store due to COVID being closed, will they still get $1,500 a fortnight even if I've not rostered them on? Or will we be paying them wages and then getting it credited back? So the employee will be receiving the $1,500 per fortnight if they've been in a retail store and let's say they've been stood down. They'll receive that even if they're not rostered on. Now, it's important that employee only registers for one JobKeeper payment. One more question. Client has paid a big deposit to cover materials on a job only in an effort to beat a price rise. Is there a way to treat this that won't represent a revenue jump? Is the deposit treated differently? So that'll come down to what they define revenue, whether it's on cash or on accrual. If you're on an accrual method of accounting, a deposit would not be treated as income, so wouldn't form part of the 30% reduction. Do I use JobStart or apprentice rebates that are coming at the end of April? Sharon, maybe email me that question offline because I don't know where you're coming from there. So you'll get the apprentice rebate, which will cover 50% of the apprentice's wage. And then if you're withholding tax from that apprentice, you also get the job. So you also get the cash boost. So I don't know what you're referring to with rebates coming at the end of April. Should we take the work potentially knowing it may not make a profit, however, it'll keep my staff full time? So I think you should only be, I think that's a commercial decision whether you should be taking on work that's possibly not profitable to keep your workers engaged. Now, obviously, if you keep your team engaged, you're going to come out of this with what I think will be a better business. And I think you hope that your staff appreciated that you've gone and taken on jobs to keep them employed. That said, I think you've got to be commercial. If there's risk in those jobs, I'd question why you'd want to take them on if you're not going to do those jobs profitably. All right, guys, I think we've made pretty good time. Out at 8 o'clock, I'll hang around for 30 more seconds for any other questions. Yeah, another one. If I have no work role for a part-time employee that I've still done, am I required to reinstate their employment and allow them to receive the JobKeeper? So there's no requirement to reinstate the employee for the JobKeeper payment. It's an option for you to see whether you want to keep that worker and keep them engaged in your business for when, you know, COVID's over and you're back and operational. Employee resigned last week after 6 months with us. Do we make claim on his JobKeeper for the period he was here? So to get the JobKeeper payment, the employee must still be active in your business. So if they've resigned, even though they're an active employee as at 1 March, you're not going to get any access to the $1,500 JobKeeper payment. And I think what you got to keep in mind there is that JobKeeper payment is not going to benefit your business. That JobKeeper payment is going to flow straight back to that employee. Has the car limit increased as a result of the increased asset write-off? No. So the car limit remains at, I don't know the number, 57,283 or 57,300. So that car limit is still in place. All right, guys, I'll call it. One more. To receive boost payments, do you just lodge quarterly payments with normal dates or does it need to be done earlier? So you just lodge it as per normal. So if you do it earlier, you won't get any faster access to either the cash, you won't get any faster access to that boost payment. The boost payment will not start to be initiated until 28th of April. And if you lodge early, you're not going to get that rebate any earlier. If you lodge later, you've got up to 2 years to make that lodgement and still be eligible for that boost payment. All right, I'll call a stop to questions there. Thanks everyone for attending. This webinar will be made available online shortly. Any questions, email me or your accountant here at the Field Group. My email's up on the screen. And thanks everyone for attending.